Buying and selling a business is not just about the money. You need so much more than that to win a deal. Hi, I'm Jaryd Krause. I'm the host of the Buying Online Businesses podcast, and today I'm speaking with Omeed Tabiei, who is a lawyer for SaaS founders and acquirers with nearly a decade of legal experience. With experience as an in-house lawyer, as well as working with boutique and large firms, he prides himself on helping his clients make great deals. Now, in this podcast episode, Omeed and I have a great connection and have a really good chat about how to raise funds to acquire a business, where you can go to get those funds. We also talk about how to raise funds to scale a business, different stages of scaling a business and different types of raises, and where to get those funds from as well. We also talk about the advice that Omeed would give to sellers, everything from his vision for people that do want to exit their business and what they need to do to and get in place before they exit their business as well. We also talk about trusts and how building trust in relationships is super important, and how this can be done unconsciously, and how you can start to do it consciously to be able to win deals and have a far better experience in business and get far more ROI out of business by having stronger and healthier relationships. I also share a lot on my side about the buy side of negotiations and how to test sellers and how do sellers test buyers as well. Now, there's so much value in this pod. It's not the only way that I can help you for free. We do talk about acquiring businesses here. If you don't have my due diligence framework, that has helped people save millions of dollars and make millions of dollars by acquiring great businesses. It takes the guesswork out of buying a business. Go away and get it at buyingonlinebusinesses.com/free resources. Let's dive into the pod. Have you been lied to about how to increase organic traffic and grow your website? I too used to think that all you needed to do is add more content and gain backlinks. But this just doesn't work. More content and more links alone is not the answer. Nor do you need to butcher your website with generic SEO changes you picked up on some crummy online tutorial, leaving with a Frankenstein website that's slow and clunky. And because I got sick of seeing great people with great websites struggle to grow them, I decided to do something about it. I created an SEO service, which is not just about publishing content and getting links. Sure, we offer that. But first, we give you quick wins, which are SEO tweaks we can make to your website that actually boost your rankings. And then we lay out a killer SEO strategy to acquire more traffic and revenue that outranks your competitors with less content and less links. We've thoroughly tested this service on many websites before launching it and have achieved incredible results, which you'll see on our landing page I'm about to share with you. Now you can finally buy a business and give it to us to grow it for you. To check out our SEO service, head to buyingonlinebusinesses.com/SEO-services and book a call to chat with us to see what is the best growth strategy for you and your website. That's buyingonlinebusinesses.com/SEO-services, and the link will be in the description too. Omeed, welcome to the Buying Online Businesses podcast. Thank you for coming on and having a chat. Yeah, looking forward to digging into your career and, just picking your brain a bunch. Now, why, how did you get into law? What's your journey? I essentially want to ask, who you work with, the acquisition entrepreneurs you work with, and what you do. But we'll get to that. Why law, and how did
Yeah,
you to M&A? Like, yeah, because laws are pretty broad.
totally. Yeah, why law? Well, I come from a Middle Eastern family, so for all your listeners out there that are Middle Eastern, there are like really only three options for Middle Eastern families in terms of careers. It's like doctor, lawyer, engineer. That's it. Like, so from a very young age, my father told me, you're going to be a lawyer, this and that, and um he kind of trained me to be that way. He would always make me negotiate for everything that I wanted. He loved to debate, that sort of thing. So there wasn't really an option in terms of choice of becoming a lawyer. I think he saw something in me at a very young age, and he obviously had some aspirations of his own, but that's essentially how I was set up to become a lawyer. And how I became an M&A lawyer is I've always loved entrepreneurship, and so what's really interesting about my journey into law is, like so many lawyers, there's a show here in America. It's called Law and Order. I don't know if you guys have it in Australia or not,
Yeah.
but like I think a lot of lawyers watch, or like a lot of like youth growing up watch Law and Order, and they're like, "Oh, that's so cool! It'd be really cool to do that." And so that's what happened for me. I watched that show, and I like kind of felt in love with the concept of being a lawyer, really wanted to be a public defender, is what I wanted to do. But I ended up working in government, and that's how I got introduced to the small business community. Once I got introduced to the small business community, then I learned about startups and tech. And then I was like, whoa, this is like next level venture capital and tech and that sort of thing. And I was like, this is like a whole nother playing field. But I always uh, was about impact. That's what it's always been about for me. And so, the intention of becoming a lawyer was about changing people's lives. What I realized was there's nothing that changes people's lives like business.
Mm,
And
yeah.
specifically M&A. Why M&A is so interesting to me is uh, for the entrepreneur, the exit is kind of the promised land. It is where all of the hard work that a business owner has put into their business pays off.
Yeah.
And so many entrepreneurs, especially in tech, with the bubble, the web bubble, so many years ago, as well as like, the number of booms that we've experienced since then. A lot of entrepreneurs, especially software entrepreneurs, create the next app, and they're like, oh, I can't wait to be acquired by Facebook, Google, Apple, whatever it is. Everyone's kind of like aspiring for that golden exit, if you will. So, in the yacht and so on and so forth, or, whatever it is, starting the philanthropist journey, or, or whatever. So that's why M&A, that's how M&A, there's both kind of like a quirky part to the story, as well as, a genuine desire for impact there.
I love it. I love it. I love the initiative for impact. This is exactly why I got started as well. Is my story being a plumber, not liking being a construction worker. Most people don't like their 9 to 5s. It's repetitive and, let's be honest, typically boring. Um, and then just serving people to get out of that, and it's very fulfilling. I'm sure that you see that in your work as well. It's very fulfilling, to see somebody's life dramatically change after an exit. I see people's lives dramatically change when they acquire a business and they don't no longer need to do employee life, and then as they grow that up, and then they can sell and then acquire another one, or maybe make a grand exit. It's another massive life change, right? So
Absolutely.
what sort of acquisition entrepreneurs do you work with, in terms of what sort of business models, size of business, types of people, on the buy side or the sell side, even growth? Like what's some of the like most typical work that you do now that you've gone out of, I guess, corporate and into, I think it's 2 years ago you said you started Optimist Legal.
Optimus Legal. Yeah, that's right. So, for all the listeners out there, for the audience, I own a law firm. It's called Optimus Legal. It's a corporate and M&A law firm. I started about 2 years ago after almost 10 years as a lawyer, working in various positions in-house at tech companies, helping them raise, multiple rounds of financing. I've, worked at in-house at a studio that got acquired by private equity. I've worked at a big law firm, so on and so forth. So 2 years ago, I started this corporate and M&A law firm. It's focused on SaaS, which is software as a service, for all the people out there if you don't know what it is. Software as a service. So it's, different software applications and cloud-based softwares and things like that. 2 years ago, I started this firm. And so we primarily represent SaaS founders. And so what that looks like is we're sell side, though it's been interesting. Some of the SaaS founders themselves have jumped on the acquisition train as well. And so we are seeing a bit of that too, but primarily we sit on sell side. When the founders want to exit, that's where we come in. We also do a lot of financings. So when people go to raise funding, seed funding, Series A, that sort of thing, or angel. These are like different, how you refer to different rounds depending on the stage of the business. So financings, sell side M&A. We do a lot of incorporations and helping them set up and get the business go up and running and that sort of thing. So pretty much anything from birth of the business, from creation of the business, starting the business to exiting the business, we handle everything from start to end.
Yeah, cool. Let's go in a linear fashion here. Um, I really want to get to exits and how you help people set up for exit and what they need to be thinking about with an exit. But you mentioned raising funds. Now,
Yeah.
we've got people here that are, starting off with smaller businesses, but they might want to raise funds. And I know that, you know, sales and marketing is a part of raising funds. And you need certain data points and things to be able to raise funds. And you can do that with all levels of businesses. So, what are some of the things that you have done that have helped you acquire financing for particular businesses? What are the things that the business need to have in place first? What do you need to present in terms of data points? And how does that work?
Yeah, great question. So in the US, this is not what most startup founders do, but for US based people, the Small Business Administration, the SBA, has a lot of the acquisition entrepreneurs are using SBA funds to acquire businesses.
Yeah, a lot of our
You
audience
can
do use that. Yeah,
They use SBA. Yeah,
yeah, pretty familiar with it. Yeah,
cool. So it's not too different uh, from getting a loan. I mean, it is a loan. It's a government-backed loan, and so what you need to show, the bank is going to let you know exactly what they need to see from you. But generally, they want to see 3 to 5 years of financials, profit and loss statements, balance sheets, that sort of thing. There needs to be a certain ratio of the debt to cash flow. Pretty much there needs to be it needs to be a cash flowing business. It needs to be a profitable business. If it's not a profitable business, the bank is going to have a difficult time underwriting it. Typically digital assets won't qualify for SBA. And so if you are trying to raise money through SBA for a software acquisition, SBA is not the right vehicle to do that. But yeah, I mean, pretty much all the things that I just said are what you're going to need to show to the bank. And then, of course, legal documents and so on and so forth, that the business is duly organized. And but for the most part, the thing that the bank is going to care about the most is that they are going to make their money back. And so the financials of the business are probably one of the most important aspects of the business to show.
yeah, yeah. So you say typically SBA is not the way to raise funds to acquire a SaaS business. Now that's typical. It can be done, obviously. I've seen it done. I've helped somebody do it to
Yep.
acquire a SaaS business, mid six-figure range business. But what would be the typical route of financing to acquire a SaaS business? Then what's the alternatives?
Yeah. It's a great question. Um, well, I think a lot of SBA or not SBA, a lot of ETA entrepreneurship through acquisition. A lot of these kind of searchers are developing independent searcher models, and so there are private funders, there are private lenders out there, there are private backers out there. You can go raise money from this private capital. You can raise a fund, and that probably would be one of the best ways to go out and acquire these businesses. There's another entity that's known as Bupos. They also are a great potential resource for people to raise capital to acquire businesses. They're very familiar with SaaS businesses. In fact, they're a financier that's focused on SaaS businesses. So I'd say, those two channels are probably the two best channels for people to raise money if they're looking to acquire SaaS businesses. Yeah, I'd say those are the two best channels. Do you have any? What are your thoughts, Jared? What do
Yeah,
you
no,
think?
SBA and BUPOs is typically the main way to go, other than outside financing through family and friends, raising that way.
Yeah.
That's a good question. Thanks for posing that to me. We do get people that do go and raise funds and want to create like a micro PE firm. That's where I'm moving into, is helping people not just raise funds and acquire businesses, but also build out holdcos to acquire the first one, and then a bunch of other ones that sort of like as a roll up in the online business space. And typically at the start, it's just SBA and BUPOs. BUPOs, though, is the terms aren't as nice as SBA, but for people that aren't in the States, it's kind of like the really the only route, unless you can raise from friends and family,
Yeah.
or outside, maybe startup angel investors like you mentioned earlier.
Yeah. Or like any sort of high net worth individual, for example. Doesn't have to be friends and family. Could be anyone who, has capital that they're sitting on, large amounts of capital, for example, and they're looking to deploy that capital. The difficulty for like first time entrepreneurs, though, is you're going to have to show some track record for a lot of these, high net worth individuals. So that might be a barrier that people run into.
Yeah, and sometimes people already have access to high net worth individuals and don't even know it, and they haven't had opened up to have the conversation with them. There's some pretty wealthy people out there with tens of millions at disposal, maybe more. Not big at disposal, for different types of investments that they understand that it could be a bit more of a gamble, but they're investing in a bunch of different things with a bunch of different people. But for somebody sitting on the side of like, I just want to raise a couple of mil, to them it's a lot, but to a wealthy entrepreneur or investor, sorry, I should say wealthy person that is putting a couple of mil through a bunch of different investments, they might want to invest with you if you have some experience, growing or running that type of business. Um, so those conversations are important to have with people, I think, is because there's a lot of money out there, and typically what we hear is like, if there's a good deal, the money will come. So
Yep.
yeah. Now,
Oh, another really so high net worth individuals. Another really good place to look is previous founders that have had exits.
yes, yes, I love that. That's a good option.
Yeah.
Thank you. So, sell side of the process, you help people raise funds. So before we get to the sell side, we just talked about raising for acquisition. What about raising for growth? It sounds like you have helped people to raise for growth to make an exit as well, right? So
Yeah. So yeah, venture financings. Mm-hmm.
mm,
Mm-hmm. Mm-hmm.
how does that work?
Yeah. So I mean, it depends on the stage of the business, right? So um, uh, you can be as early as ideation stage. So in the early 2010s, what we were seeing is like a lot of people being able to raise off of pitch decks, right? Or we also saw this during the ICO craze of crypto during COVID as well. So people create these like really sexy pitch decks that are designed really beautifully and all that kind of stuff, and they go out and they're able to raise money that way. The state of the market that we're in as of the taping of this episode on July 1st, 2024, the state of the venture capital market is not conducive. Actually, in general, what we're seeing is like just a tightening of funds on the VC front. So even founders that are interested in that may have been interested in raising, we're just not really seeing them raise. We're seeing the entire market for the most part, except for one area. And I'll tell you what that area is, and I'm sure you can guess what it is. But for the most part, founders are turning to become bootstrapped, and a lot more of them are actually thinking about selling. And it's this interesting actually dynamic between when VC money dries up, founders start thinking about, well, where else can I get money? It might be time to exit. But as I mentioned, it depends on the stage of the business. So I'm not saying that it's impossible to raise off of an idea. If you're an entrepreneur that has a track record of being a successful entrepreneur, for example, you might be able to raise off of an idea. If you're already well networked with high net worth individuals, you might be able to raise off of an idea. If you have people that just love you and want to see you succeed and they love your idea, you might be able to raise money. So I'm not saying that it's impossible to raise money. I'm just saying that the state of this market is more difficult than other time periods that we've seen. But where you start is typically, you have to have a pitch deck. If you have an idea for a business, you create a pitch deck that'll be raising your angel or friends and family round. If you are a little later stage, you might be raising your seed round. So your seed round is usually like a couple million. Angel, might be anywhere up to like 500K, for example. Seed round is 500K to like, 2 to maybe 5 million. And everyone has like different designations for these things. These are just like kind of arbitrary names for the rounds, and they've changed many times over the years. For example, what is now seed used to be Series A, and the numbers just keep getting bigger. And so, anyway, so it just depends on the stage of the business that you're in. But so after seed, most likely, Series A, you're going to go to institutional investors, and you're going to maybe some of your seed investors will carry over. They'll become your Series A investors. But Series A right now, I think, sits around like 10 to 15 million is the typical Series A stage round. But in terms of what's needed to raise, you need investors. So you need a pool of investors, and you need to have a strategy to it's the same, like the same way you acquire leads for your business. It's much the same. You need a way to acquire interested, warm investor leads. You need to nurture those leads.
Those relationships.
Yeah, those relationships. You need to build the relationships. You need to sell them on your value proposition, on your mission, on your vision, that sort of thing. And they're investors, so it's not too different from going to a bank. The only difference is a bank is an institution, that's responsible for holding your money and also distributing capital.
Yeah.
Same with an investor. The investor holds the capital. They're going to conduct much of the same diligence that a bank would. So it's not too different of a process. And I actually always tell that to entrepreneurs too. Entrepreneurs will often come to me like, "Oh, I've never raised money." I'll be like, "Well, have you ever bought a house? If you bought a house, it's not too different from buying a house."
Yeah, absolutely. Also, I'm very glad that you mentioned about the state of the market. It is going to date this episode a bit, but it's important for people to know that as funding, or even just like the whole of the world, it's finances have tightened up a bit with obviously increase in interest rates, and as this happens, and there's less funding and less people can afford what they used to, uh, money becomes a lot tighter, and it's the same in the online business space. Is there people that might have large mortgages, or they bought a bunch of property through COVID because it was going really really well, and the repayments have gotten higher and higher, or they've got a bunch of debt on other things, and so you've got these people with a bunch of debt and maybe a cash flowing business that sort of go, okay, how can I continue paying for some of these things? Money tightens up, and that's why we are in a seller's market and have been most of the year in the online business space. That might change in 2025. I can't see it changing through 2024. That's just a bit of a prediction in my eyes, and in the state that we're in. And I think maybe even through 2025 we might still be in a bit of a seller's market for online businesses. So yeah, it's a great place for my audience to be. They're listening, thinking, when's the right time to buy a business? Typically when money's tight, because people need to offload some investments they have, right?
Yeah. Yeah. So I told people that I would tell them the one place where money is flowing in terms of venture capital, it's AI. if you couldn't guess already. So AI is the one place that venture capital is like flowing uninhibitedly. So if you've got an AI startup, good for you. Go out there, raise money if it makes sense, and that's the one place where we're seeing kind of venture capital doubling down.
Yeah, yeah. There's obviously the whole world can see a future in AI. It's pretty insane what is coming. But let's not open that can of worms in that conversation.
Yeah.
It's more than just a can of worms. Uh, so we've talked about acquiring funds for acquiring, also acquiring funds for growth. Now, when it comes to exiting a business, what are some of the things that you do to help people get in place for the exit, and how do you sort of work as a shepherd in that uh, in in that role of a lawyer, being on the sell side of a business?
Yeah. Let me tell you about the world I envision, and we'll
Bring it
start there.
on. Bring it
So, the world I envision is a world where people who sell their business think prudently about selling their business. They have a plan to sell their business in terms of a time period. They know at least 36 months in advance of selling their business. They don't wait until the last minute.
on.
They plan out from 3 years of the date that they actually decide that they're going to list their business for sale. And they spend the time and the diligence to put together a team during that 3 year period that consists of an accountant, a sell side advisor in terms of like an M&A broker or an exit advisor of some sort, a lawyer, and that team coordinatedly works together to get their financials all in order, to get their exit data room in order, to get all the systems and processes in place, to make the person, obsolete to the business so that it can be properly handed off to the buyer. That is the world that I envision, Jaryd. And so
That's a tall
now,
order with 36 months. For most entrepreneurs, can't think that far ahead. But I love it.
yes.
I love that. I love that vision. I love it.
Yeah, thank you, man. Thank you. Yeah. Now, okay, so like if this were the Matrix and you took the red pill, the actual world that like exists right now is business is on fire, not in a good way. Like, entrepreneur is up to here with the business, like wants nothing to do with it anymore. Literally, it's a hot potato that they're like trying to offload to the next person. Nothing is in order. They haven't had a bookkeeper. There's no financials. Their legal documents are like a total mess. There's almost no systems. The software has no so that's the red pill like matrix. If you were to like wake up in the from the pod, that's like the world that you would see. Yeah.
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 Yeah,
So
it's pretty typical that people, well, it's an entrepreneur that's like running their business, super busy. They haven't incorporated, work on the business, not in the business, as well as maybe they should from reading the book, The E Myth, Michael Gerber, um, and replacing themselves out of the business. It's pretty typical, especially for businesses, up to the mid seven-figure range. And yeah, it's so then what's your role? You sort
yeah.
of like,
So my role is to bring that vision, more of that vision, and so um, it depends on what stage people bring me into. Typically, we come in oftentimes like post LOI, so the person has already started to negotiate some aspect of the deal with the buyer. They realize that they actually need an attorney. that is focused on M&A and knows M&A, because M&A lawyers are a different breed of lawyer than your general corporate lawyer, for example.
Absolutely.
It just because a lawyer is a corporate lawyer or a business lawyer doesn't mean that they have M&A experience specifically. M&A is a very niche area of corporate and business law. And so maybe one of their advisors tells them that they need an M&A lawyer, for example. So they come in, there's an LOI on the table. Typically, once the LOI has been signed, there will be a due diligence request list that comes in from the buyer. That due diligence request list will have a number of different items on there. There will be a whole slew of legal items on there, speaking to the state of the business, the legal state of the business, the contracts, the intellectual property, so on and so forth, that sort of thing. So that's where we come in to help set up what's called a data room. So a data room it can be as simple as like just a Dropbox, for example, or a Google Drive.
Yeah.
Yeah, and all the documents that relate to the business go into that repository for the buyer to conduct a review. So we come in, we help compile those documents. Um, and what's really important for the sell side advisory team to be doing with the seller is to be preparing the seller for negotiations with the buyer and anticipating, questions that might arise from the buyer in terms of risk.
Yeah. Yeah. I love it. This is me. I'm on the opposite side. I'm the buy side advisor, where we come in and say, okay, we've got this LOI. This is what we're thinking. This is the data we need to prove it's what it's worth, and then we get our valuation based on that data, and then we start negotiations. I guess typically I don't do too much negotiations. I'd like to come in with one price and one price only, and if it's not the right price, then let's not waste your time. Let's not waste our time. I don't like to play games. Uh, and yeah, I mean, it's it's super important. This data room and having a buy side advisor and a sell side advisor, so both parties can come together in an agreement and have a win-win situation. There's so many emotions that this is the thing. You probably don't talk about it much, but I'd say it's a big thing for lawyers is managing people's emotions and helping them through the process to set some realistic expectations, because there's a lot that goes in. There's the data, but the data, it's not just about what the data is. It was also about how we feel about the data on the buy side, and also how the seller feels about where the current state of the business. And the seller is in this position where they've just been grinding for a ridiculous amount of time and they're done. But they also, because of so much effort and time has been put into this business, they have this certain level of expectation of like what it's worth versus like what the market actually might see its worth, and the buyer. So how do you manage people's emotions and hold their hand in a way that ends up being a, a the best experience possible for them with an exit that they're like, I'm happy with that? What are some of the things that you need to navigate? It's tricky waters, right?
Definitely. Yeah, I mean, it's yeah, at one point or the other, or it may still continue to be, as you said, it's like it's their baby, man. I think one of the biggest challenges for entrepreneurs out there by far, for entrepreneurs selling their businesses, is identity in the business, where the business becomes so interconnected with who the person is.
Mm-hmm.
Yeah, so they take things very personally. For example, like if a purchase price comes in, that doesn't match, and it usually never does, because sellers usually have a very unrealistic expectation around what the business should go for.
Mm-hmm.
um, and again, the reason is, as you mentioned, like they spent so much time working on the business and so on, and so they feel that they should be compensated to a certain amount. Maybe they had a number in their mind. um, about what that business should go for. That's why I'm saying you should plan out 36 months in advance, because if you have a number in your mind 36 months in advance of selling the business, you have 3 years to get the business where it needs to go to hit that number. You can definitely get what you want for the business. Let's say you want to sell the business for 100 million. You can absolutely get 100 million for your business. You just have to have the right things in place for the business to be able to have the value of 100 million.
Exactly.
You can't just go into the market and say 100 million if, you know,
Market's not
the
there.
numbers and the financials don't necessitate that number. And there needs to be a certain amount of buffer window time so that when reality hits and you figure out what the actual valuation of your business is, which, by the way, for all the people out there, if you're listening to this and you're contemplating selling your business at any point, I would highly and strongly recommend just go talk to a broker. Go talk to a broker. There are so many brokers that will give you free valuations of your business.
We do
And
that.
so go get it.
Bring it to us.
Yeah.
Yeah.
Oh, you do that?
Yeah. Yeah.
Cool. There you go. Jaryd will give you a free valuation of your business. So go talk to Jaryd. He will value your business so you can figure out where you are at right now. And maybe you don't want to sell for another 5 years. Maybe you don't want to sell for another 10 years, but just figure out where you're at right now and figure out where you want to be when you exit so that you don't get hit with that harsh reality of, you know, the number that you want to exit at is not the number that you're going to be offered, and it's not the number that you're going to get. But to your question, Jaryd, how do I help walk people through that? To be honest, empathy is something that I value highly. I actually often refer to myself as a therapist of the law, in that, like, I'm a legal therapist. Like, we really have to be therapists for our clients. I think the broker often gets a lot of the flack as well, because, you know, they're the ones that kind of guide the process, list the business, they're fielding the LOIs and that sort of thing. And so by the time I get involved with the business, the seller has had to go through a pretty significant process of coming to terms with the fact that, okay, this is what we're going to get, and you know, we're going to either let it go or you know, we've seen all types of things. Sellers like get change of hearts in the middle of deals. It could be like, you know, some benign term that throws them off. And
Yeah, it's a tricky one when you see that their identity is wrapped up in the worth of the business, or wrapped up so much in the business, and an offer might come through, and it's just a direct hit to their self worth in their view and their eyes, right? You can clearly see why you're a therapist of the law. It's so there's and it's also throughout acquiring a business, the similar thing, and also through growing a business, the similar thing. So my clients that I work with, that I'm helping them acquire and then grow, when we do one-to-one coaching, a bunch of them call me a business therapist, because they come to me with all these crazy ideas or all these problems, and at the end of the call you kind of just go, all right, this is, you know, you've got 2 or 3 things you need to focus on, and that's it. And just, we calm down the other emotions and all that sort of thing, and start to like see where we're really at in reality. And it's not, you know, it's not just me that's a therapist, and it's not just you that's a therapist, and I'm sure you're excellent at it, Omeed. But what I think is that most consultants are just therapists. There's probably like 10 to 20% of the IP goes into a call with somebody, and the rest is really therapy. And that's why I think
yeah,
the best consultants are really the best therapists, right? Would you agree?
I would absolutely agree. 100%. 100%. Yeah, I think, you know, the skills of listening, empathy, relating, and these are the core skills of great negotiators. These are the core skills of great deal makers. You know, one of the things that I stress to my clients, and I often am pointing out, is state of the relationship. Like, how do you feel about this person? Like, do you like them? Something as simple as that.
It sounds simple, but it's so big, right? It's so big.
So yeah, I mean, deal making is relational. There is no making of deals with some sort of relationship involved. You can't make a deal if there isn't some sort of relationship involved. And so for the seller, it's really important that the seller feels that this person that they're going to pass the business off to has the best interests of the business in mind, that the seller feels some sort of connection to that person. Not all the time. Not all people care about these sorts of things, but to some degree they will. And it's often the relationship, I've noticed, that saves the deal. When the relationship between the seller and the buyer is good, the deal will go through no matter what. If the relationship between the seller and the buyer is bad, a pebble in the shoe can destroy the deal.
Yeah. And like relationships are everything in business and in life, I believe. And I'm big on helping people build a great relationship with the seller. And if you think about just like it being very transactional, like why would people buy a product from you or a product or service? Is based on trust, right? But how do you gain trust? Is through a relationship, typically content marketing or them seeing you a lot of times, or here listening to a podcast. On your podcast you have people listen to you multiple times, and once they've heard you, that they build a relationship with you. And the better the relationship is, or the better they feel about the relationship with you, the higher there is the trust. And trust is what makes great transactions and win-win situations happen. And that's where I think is where deals are. That's why building a relationship with somebody, as you start to do this, you can start to, when you do, there's these, and they may seem little and insignificant, but when you send an email or you ask a question or you ask 5 questions and they get back to you with 3 answers, you might not see that consciously, but unconsciously you're like, oh, the trust metric has dipped a bit because there's 2 answers that aren't there, right? So
Mm-hmm.
when you're building a relationship, whether it's an intimate relationship, a business partnership, or anything, even with an employee, is you're throwing out things into the universe that allows you to see whether you can trust them or not based on how they walk through the process of buying or selling the business. And these are absolutely critical metrics that I don't think anybody really talks about, when it comes to how do you build a relationship, and then how do you quantify the amount of trust you have for that person based on the relationship and how they behave throughout the transaction.
Yeah. And for the seller, on the sell side, it's a bit different in
Mm.
terms of, they kind of are holding the jewel, that the
Yeah.
buyer wants.
So what
So
are some
it's
of the
like,
trust? So what, like, because that's a really good side to talk about for us as acquirers on my side as my audience. But for the sell side, what are the things that a seller is doing to sort of test the buyer to work out how much they trust them to take over their baby? Or is there certain things that they do that they might not be conscious of that happen?
yeah, I think every seller is, anyone who's ever bought a business has experienced this, but the broker is usually going to test to see if you have the capability to purchase the business. And that's not, necessarily so much the case. For a lot of the software businesses, they get acquired by strategic acquirers, for example, or private equity, right? So, and a lot of the software founders, that I work with, they'll tell you, like, I get hammered with emails every day, every week, every month from these PE people trying to buy my business, right? But they're always lowballing them. The only time that their ears ever really perk up is like when the number starts to get to a place where they're like, ooh, that actually like is getting kind of warm to, the amount that I actually might consider selling my business. But it really is, you know, I I think we both know, money talks, and coming forward. I actually really like your approach. Is like, I'm not here to go back and forth, on price. This is the price. Either you want it or you don't. I think that's actually a really great approach. It's very straightforward. It's very direct. It gets to the point. And it's a great starting place to understand, is this relationship going to move forward or not? But yeah, so what do other things sellers do to suss out, um, potential buyers. You know, for sure, price, ability to buy. Um, you know, I think in general, like another thing that people don't really talk about, which is really qualitative, is like what is the vibe? Like I have no other word other than to
I'm with you
use,
on that.
yeah, um, is it I think people like doing business with, as you mentioned, people not only that they like, but they just like to be with. So like if you're pleasant, if you connect with people easily, you make an effort to get to know people even outside of the business relationship or the deal. We were on a negotiation the other day. It's actually one of the software founders that I represent that's acquiring a business, and we're just the broker was talking about how they're going to go on vacation. Perfect opportunity to be like, oh, where are you going on vacation? Have you ever been there before? Like,
Mhm.
don't make it so much about the deal so that it's like so structured. uh and we saw the relationship really soften up over time as time went on. Initially, they were very kind of standoffish. We were in the running with a number of different other acquirers, all gunning for the seller's business. What makes you stand out? They like you.
Yeah. Yeah. People connect with people that are real, not like too rigid. There's nothing to grab onto and to like, I've found it hard to build relationships with people that like, every time you speak to them, you're like, oh, how are you going? What's happening here? How's life? That sort of stuff. And they don't really give you anything. They don't say I'm going on a holiday. It's like, yep, no, everything's all good. Kids are good. Life's good. And you're like, come on, man, give me something here.
Yeah.
Like,
There's is there something in there?
yeah, are you a person or are you going to be one of these AI robots and we're not going to know the difference between you and an AI robot? Like,
Hey man, apparently we're heading there. So
I know.
here's another thing that just came up for me too, is like the other thing that sellers, okay, so once you get past the price gate, if you can meet the seller in the purchase price, that's definitely going to be the number one thing that most sellers look for. But the other thing is, um, as the buyer of the business, you really want to know, hey, like what has your journey up until this point been like? Where did you start?
Mm-hmm.
Where did you end up? How did you end up there? What was your vision? If you were to continue running for this business for another 10 years, what would you have done? What would you have created? What were you excited about that maybe you didn't get a chance to get to, that you saw a lot of potential in? Where did you want this business to end up? These are like things that you want to connect with. It's like the same way if you were to meet the child of a person that you loved, for example. What are you going to ask him? You're going to ask him like, okay, like, how's life? How's school? How's what do you want to be when you grow up? Like same, take those kind of same questions and
I love that.
apply them in that same way. So
I love that. And I like to ask the questions why, like, what have you done that didn't work? And then why didn't it work? Is there things that you could have done differently? And if so, how and why? And like, we talked about relationships a lot. That's what business and life is. And to make a transaction happen, the relationship needs to be solid in order to have trust, or for that trust to be built. Now, with that transaction of one business, I typically tell people there's more value in the relationship than the business that you acquire alone or the business that you sell alone. Because maybe on the sell side, you're like, okay, I built this thing up, I've sold it. It was a SaaS tech startup, whatever it was. And then this large um, tech firm acquired it. Great, you got a relationship with them or a couple of people in that firm. Maybe you're going to go and start another one, build it up, and then you could just keep that relationship going and then build them a product or a service that they might need, that you can just roll it straight in, and you don't need to go and look for a seller, and you might not need a broker to be the intermediary. Like, there's so much value in the relationship. I typically say more so than the transaction itself. And yeah, I honestly, Omeed, I've really appreciated appreciated this chat with you and building our relationship. I feel like we've got a great connection, and I want to thank you so much for coming on and sharing everything you have with the listeners. So thank you so much.
Yeah, man, absolutely. Yeah, so just want to squeeze this through is I always tell this to software founders every time I talk to them. As I mentioned, their inboxes are usually filled with both investors and acquirers that want to buy their business. That vision that I described of 36 months out, imagine if those software founders were building relationships with all those people in their inbox. Not all those people, not all of them, but pick the ones that are the most promising. And what usually ends up happening is your investors either I introduce you to your acquirer, or your investor becomes your acquirer, or one of the acquirers that has been in your inbox trying to acquire you ends up being the company that acquires you. So imagine, not having to go out there and rush and be stressed in the exit process, but rather, having already identified the person or company that's going to acquire you, just how much more of a pleasant process that is. And it all is as a result of relationship.
Yeah, and it's organic, right? And that's what we're looking for. It's so nice. Omeed, where can we? That's so good. Thank you so much for coming on. I really appreciate all of your wise words. I know the audience would have loved this episode. Where can we send people to find out more about you and Optimist Legal?
Yeah. You can follow me on LinkedIn, connect with me on LinkedIn, send me a message on LinkedIn. My name is Omeed Tabiei. You can see it right here, I believe.
Yeah.
There. You can find me on Instagram, SaaS Biz Lawyer. You can find me on Facebook, or you can go to our website, optimistlegal.com. And yeah, feel free to reach out. Would love to connect. Happy to be a resource.
Awesome. Again, thank you so much for coming on. Everybody that is listening, thank you so much for listening. If you guys have more guests like Omeed as suggestions, bring them on. Also, I typically don't ask for much from you guys ever. I think the last time I asked for a review was, I don't know, probably years ago. If you're open to leaving a review, please do. I'd love to see that feedback there. Thanks again, guys. Speak to you soon. Thanks, Omeed.